Hi, everyone. Let's get started. Welcome to Bank of America Business Fundamental Series. I am your host, Irene Cho. Um, we are gonna cover building business credit today. This webinar is brought to you in partnership with City of Los Angeles Economic and Workforce Development Center, BusinessSource Pico-Union, Westlake region operated by PACE Business Development Center, and Bank of America. This webinar will be recorded and you may find it on our website, e-library, after a week or two. Okay, just a little housekeeping before we get started. Please mute yourself during the webinar. We will have the last 5 to 10 minutes for Q&A session. So please ask the question during Q&A session using raising hand emoji or writing question in the Q&A box. Okay, before we get started, I'd like to introduce PACE briefly. PACE is a Pacific Asian consortium in employment. We are a 501 nonprofit organization. Our business center provide many counseling services for local small business owners for free. We also provide free webinars and training to accommodate your business to take to another level. We have a various loan program you can apply to your business. So if you have any questions, please feel free to visit our website, pacebdc.org, or give us a call. We have an upcoming webinar regularly. You can always check our website and register. Past webinar recordings, please visit our e-library. Please give us some time for our marketing team to upload the recording. It might take about a week or 2 weeks. Okay. Okay, let's welcome our guest speaker, Valerie.
Hi, good afternoon, everyone. And thank you so much, Pace, for your continued partnership, and Irene for being a fabulous partner and allowing me to be able to present to all of you today. Let me go ahead and share my screen. And Irene, if you can just confirm that you could actually see my screen.
Yeah.
Perfect. Thank you so much for that. All right. Well, today's subject is building business credit. But before we dive into it, let me go ahead and introduce myself so you know who's talking to you today. My name is Valerie Rivas. I'm with Bank of America, and I'm Vice President for Small Business Community Engagement here in Southern California and Los Angeles County area. So as a business community officer, what do? I do financial literacy, such as today, workshop webinars, share the resources that we have at Bank of America for business owners and entrepreneurship, but then also create awareness on access to capital options beyond to what we have to offer here at the bank, or if your bank declines you, where to go. So give you that guidance. In addition to that, I do sit on a few nonprofit boards and where they all support entrepreneurs and business owners like yourself. I've been in the industry for 20 years, been serving entrepreneurs and business owners like yourself for the last 14 years. And I've also been with Bank of America for a total of 10 years. I do sit on the board here internally for Better Money Habits, and it's our financial literacy segment. So I train the trainers here, our volunteers, so that they can provide financial literacy out to our community. So I drive volunteerism for that. And then I also sit on the Hispanic Business Council. And what we do there is we drive different initiatives for the Hispanic community throughout Los Angeles. So just a little bit about the work that I do. I'm excited to be here. So let's go ahead and get started. Building business credit. So what are we going to be talking about today? what is business credit and why it's important. We're going to dive into the 6 C's of credit. The 6 C's of credit essentially is what lenders take a look at when we're reviewing a business loan application. So getting you ready for that. Key factors to small business credit, personal credit versus business credit, how to raise your business credit score, and credit score best practices. Now, building business credit is actually very, very important, and you want to start doing this early on, because as you start establishing business credit, you will start building those relationships and you are more likely to get better terms and better rates because you already have the history. I always tell my clients, take a look at your credit as relationships in the past that you've had. So it's kind of like a report of all the relationships you have, and then it also tells you whether you're paying on time or you're late. So then what happens? People or lenders will take a look at that and make decisions based on what's shown there. So very, very important that you take care of your credit. More importantly, your business credit as well. So that way you are set up for success whenever you need any type of access to capital or any type of loan. Now, every year at Bank of America, we do something called the Business Owner Report. And some of our I'm gonna tell you some of the stats that are related to today's workshop. Now, why do we do a business owner report? It's pretty much a survey so that we can gain our clients' perspectives, their outlooks on the economy, their aspiration, what goals, where they feel their company is going, but more importantly, how we here at the bank can support them better by either one, providing resources or additional services that we might be able to help our clients with, or also building new partnerships so that we can have those resources for you. Now, in our 2024 findings, 71% of our clients were looking for access to capital options. 84% feel that they're being impacted for inflation. 87% they feel that the revenue will increase. And then 80% are planning to expand their business. These are all different reasons as to why you should have good credit, because you are set up to success so that you can get lending with those traditional lenders. Now, let me talk to you a little bit about traditional lenders versus non-traditional lenders. Traditional lenders are going to be your major banks. Okay, so that's going to be Bank of America, JP Morgan Chase, US Bank, Wells Fargo, Citibank. Wow, I just named all my competition. So those would be the traditional lenders. Now, traditional lenders, they go based on what you've done in the past. So what do they want to see? They want you typically to be in business for at least 2 years before they are able to extend any type of credit. Of course, there's exception to the rules, so always check with your bank before you go to another lender. Why would you want to check with your bank first? Because we're going to give you the best rates and the best terms that are available out in the market. So again, traditional lenders, take a look at your history. So they want to see 2 to 3 years of your tax returns for both personal and business. And obviously the lender will tell you any additional documents that they need. But in addition to that, you would have to also be able to show that you have capacity to pay. So capacity to pay is back. So what does this mean? I think everybody here on this call is in the business to make money, right? We are in the business to make money. We don't go in to break even. The goal is to be profitable. Well, traditional lenders want to be able to see those profits, that you're able to afford the debt that you're taking on. Now, non-traditional lenders, they may also incorporate these C's of credit as well. However, they could be a little bit more lenient, or they could also maybe not ask for as much documentation, or also take projections. They could also help you if you are at a startup phase. Now, one of the things that I am proud of at working here at Bank of America is we actually do a lot for the community, and we donate back to the community. So we actually have a $2 billion commitment towards these type of loans, which we can get into if we have time at the end of the session. I usually like to go through the additional resources that we have aside of what PACE has to offer. Now, let's dive into the 6 C's of credit. So as I mentioned earlier, the 6 C's of credit is what the lenders take a look at when reviewing a business application. So if you have these embedded in your full financial picture, you're actually in good shape to get lending with the traditional lenders. So number one is capacity. So typically we want to see that you're able to generate $1.25 of excess cash flow for every $1 of debt that you have. Another way that I could put this, so that way you can kind of get a little bit of a more of an example, is let's just say that you have a loan for $100,000, and for the sake of an payment is $1,000. We want you to be able to show us that you have the capacity to repay us by being able to pay that payment 1.25 times back. So we want to be able to see that you have that excess cash flow. And why is it 1.25 instead of just one? It's because, we all know that there could be unexpected expenses, and we want to give you a cushion for anything that may come up for the business. So we want to set you up for success when you are taking on this debt, is to protect you and also the bank for you to be able to pay us back. We don't want to put you in a bad position. Number two is capital, or I like to call it money in the bank. How much money do you have in the bank? How much of that are you retaining as far as your revenue? So let's just say you come into the bank and you say, oh, well, my revenue is $500,000. And if I only see $500 in your account, I'm probably going to have some questions, because I'm thinking, one, maybe you may have another relationship with another bank, which is totally fine. Or two, maybe you are having some sort of cash flow issues in where you're not getting paid on time. And so we may provide solutions for you. And the goal is for you to get on top of it before you get into trouble. So I always tell my clients, you should have that number in mind of, okay, once my bank account hits a certain number, there's something that I need to pivot, or something is wrong. I need to start calling or bill, whatever it is need to do, so that you can make those collections and keep your cash flow, healthy cash flow. Number three is collateral, or I also like to call it, what are you using the funds for? What is that money going to be used for when you borrow the money? The bank and the lender will want to know, not only are they letting you borrow the money, but also depending on what type of collateral you have, you may also get better terms and better interest rate. Let me give you an example. For example, if you go ahead and buy a commercial property, we can finance you up to 25 years through an SBA program. Now, let's just say that you get equipment, the maximum that we can go would probably be 10 years in an SBA program. And really, depending on the type of collateral, that can fluctuate as far as the terms and the rate that come along with it. So just make sure that you have communication with your banker and let them know what you're going to be using the funds for, because it'll help you structure so that you can save money as well on the interest rate and get the best terms available. Number four is conditions. So this has to do with the market conditions, including the economy, industry trends, environmental factors, and everything that affects your industry. We will want to know those risks associated and how you're going to mitigate them. Okay. So let me give you a couple examples. So back in when the pandemic happened, which I hate talking about it, but when the pandemic happened, there was some businesses that thrived, some businesses that were forced to be closed, and there were some businesses that pivoted. So at that point, a lot of the lenders were closed, like they were not lending any money because a lot of these businesses were not operational. So that was a market condition. That was, including our economy, it was affecting it. So it was just like a worldwide pandemic, unfortunately. Now, something else is, if you are starting up a business, maybe some of you are starting up a business right now or looking to see what you might want to start up, take a look at industry trends before you open up that business. So I always bring up the example about Kodak. Like, what happened to Kodak? They were a film company. Everybody was about film. And then what happened? Things started being digital. And guess what? Kodak didn't really pivot appropriately or in time for them to stay in business, or at least, they're still around, but just they weren't as what they were before. So very important that you your industry you're getting into, and very important that you take a look at the trends. Something else that happened to me back in 2007, I opened up an escrow company because residential real estate was booming at the time. And I thought it was never ending. So I opened up an escrow company, and guess what? 2008, boom, market crash. Valerie did not have that business anymore. I obviously did not investigate or do any research in the business that I opened up. So learn from Valerie, do your research before you open up a new business. And also, if you're in a current business, just make sure it's not a dying industry. And if it is, get on top of it so that you can pivot before you get into trouble. 5 is character. So this are different things like any of your business related attributes, on your owner experience, any type of knowledge, financial competence, personal credit history, very, very important, especially if you don't have business credit. We will heavily take a look at your personal credit report. Why? Because most likely, since you are the owner, you will most likely be able to use your business credit more or less around the same like you use your personal credit. So things also that you may want to boast and let the underwriter know is, let's just say that you've been in business for 10 years and you've had an employee that's been with you since the beginning for the whole 10 years, or you have several employees that have been with you 10 plus years. That says a lot about your character, stability, and the way that you're running your business and making it a nice place to work. So that those are some things that we will want to know as a lender, because this shows stability. So those are the 5 C's, first 5 C's that really matter. Now the 6th one, it also matters, but this was added not too long ago, and I feel like it's actually a very important one. Communication. How often are you communicating with your business banker? If you call your business banker saying that you want to do a loan, or you have certain things that you want to do in 2025, they can actually guide you and say, hey, you know what, I heard rates are going up. You may want to do this before then because feds are talking about raising the rates, or they may have a certain promotion at the time that might benefit you based on what you're trying to do. And then also they can let you know about different resources, different help, grants, different things like that that can help benefit you and the business. Another strategic partner that you should have is your accountant. Your accountant should be one of your best friends along with your business banker, because those two partners can actually help you get to the next level and be able to work together to get you where you need to be. Irene, I don't have any access to the chat. Do we have any questions before I move forward?
So I have one question.
Okay.
Banks typically requires 2 years of operations before extending a line of credit. First one, have you seen situations where a line is extended without being operational for 2 years? And second question is, do you recommend obtaining a credit card to help bridge the gap?
Yes. So definitely do get a business credit card. It helps you being able to bridge those gaps. And also when you do a credit card transaction, just remember you're getting free financing if you pay that statement when you receive it and you pay it right off. So it helps you delay your payables, and it gives you a little bit of time for you to be able to provide your services, get paid back, and then pay us back as the lender. So yes, absolutely. Second, yes, for the most part, lines of credit, they do require at least 2 years. Now, I mentioned this is for traditional lenders, okay? There is some nonprofit lenders out there that might be able to do a line of credit with you being a startup, because there might be a need, but you would have to go through a nonprofit lender, which I'll talk about that at the end of our session. And I think there was one more question, Irene, and I don't remember what the last question was that I didn't answer.
Okay. Uh, do you recommend obtaining a credit card to help bridge the gap?
Yeah, that's the first one I answered. I think it was the first
Okay,
one.
so first one, have you seen situation where a lines is extended without being operational for 2 years? I don't think it's
So yeah, as I mentioned, the lines of credit, those can
Mhm.
they're a little difficult to get qualified. And the
Yeah.
reason for that is because a lot of people just misuse them. They don't have a full understanding, which is great, because with these workshops we go over different ways and different products that you should be using for different needs. And so a lot of the lenders, they've shied away from line of credits, or they've put extra guidelines, like instead of 2 years, maybe they'll say you have to be in business for 5 years or 3 years, or have a certain dollar amount in the bank account before they extend credit. So the short answer is yes, but always check with your bank, because they may have something where they may have like a product maybe that other banks don't have. So I always recommend communicate with your business banker, communicate with your accountant, because they can help you get to what you need. Any other questions?
Yeah, another one. So do we need to have a bank account with the BofA to apply for a loan with the BofA?
No, you do not. You do not. It does help, because depending on balances that you have with us, we want to thank you for your relationship. And then you get certain discounts for the rates and the terms and things like that. So we do value your relationship, but you do not have to have your bank account with us to be able to apply. And you can always work with our bankers, and they can kind of let you know, hey, if you move your relationship before we apply, we can save you, I don't know, half a point, a quarter, depending on what relationship status you have. Great question. Thank you. We're good. All right. Sounds like we're good.
Yes.
Awesome. Thank you. Now, let's talk about 3 factors to small business credit. So your ability to pay, stability, and your willingness to pay. Your ability to pay. So income of revenue is all your revenue is considered cash flow. Okay. So typically, as I mentioned earlier, your ability to pay, banks will want to see at least $1.25 of excess cash flow for every $1 of debt that you have. That number can change also. Let's just say if we go through an SBA product, also known as a Small Business Administration product. So just always work with your banker to see what the best route would be for you. Also, a lot of the lenders, they require at least $100,000 in annual revenue. Most banks do require $250,000 before they extend credit. Again, this is just kind of for you to get an idea. It's not set in stone. And there's also always exception to rules depending on if you have experience, or if you're transitioning or buying somebody out. Those all can also be an exception as well. So just always work with your banker. But more than anything, more or less, that's kind of what we're looking for as lenders. Your stability. So as I mentioned, we want to see at least 2 to 3 years of verified tax returns, both personal and business. So we want to see the stability. I mentioned to you earlier, stability, showing that your employee has been there from the beginning. Like, all those things actually matter. And then, of course, establishing an employer identification number that you can obtain through irs.gov to be able to maintain your business expenses separate from your personal. Your willingness to pay. Obviously, we could see that through your business credit report and your personal credit report, but your willingness to pay on your past payments on your personal credit and your vendors, that's also very important. One quick thing, if you are working with vendors or suppliers, always check with them to see if they report to Dun & Bradstreet, meaning that they're helping you report to your credit bureaus. And there's been many times, okay, where my client says, I have an 800 score. I have great credit, everything should be fine. I think we're ready to go. We're profitable. Let's do it. We run credit, and then their business credit is really, really low. And they're in shock. They're like, why? What happened? I'm like, it looks like your vendor or your supplier is reporting you negatively because you have not been paying on time. Oh, but I go into them and they give me coffee and donuts in the morning every time I go in. Everybody's really nice. I'm like, yes, but this is something the system is automatically doing. So always check with your vendors and suppliers just to make sure that you don't put yourself in a bad situation once you're ready to apply for loans. Okay. And types of credit scores. So credit score is pretty much what a creditor and lenders will base off your ability to repay based on your personal and your business credit. So there's both 2 types of credit scores, okay? There's personal, and then there's business credit. Obviously, personal, if you don't own a business credit, you'll probably start establishing that if you have an EIN number. How personal credit is scored. So we call it something called the FICO score. And obviously it varies, the higher the number, the better the credit score that you have. The importance of your FICO score is how you manage your personal credit is an indicator of how you manage your business debt. I kind of did get ahead of myself and said that earlier, that when it comes to character, that's one of the things that we do look at is your personal credit report, because most likely if you don't have as much business credit, that's most likely how you're going to use it. And when it comes to FICO scores, they range anywhere from 300 to 850. Obviously, the higher the credit score, the better your score will be based. Also, you can improve your credit score by taking a look at your credit score on having like a credit monitor service, or also requesting a copy of your credit report so that you can see any type of inaccuracies or fraud on there that you can report to actually get your credit score to go up. So it's always very recommended that you do that. How is business credit score based? So several reporting agencies such as Dun & Bradstreet, Equifax, and Experian, the scores range from 1 to 100, but that's not always the case depending on it, which agency or what service what are the agencies that you're using. So the first one is Paydex score. So this is based on a 12-month period and is payments that are reported to Dun & Bradstreet. And then there's Equifax Payment Index. This is based on your business payment history. And then there's Experience Intellect Score Plus. And this is both a mix of both your personal and your business data. So that's kind of how business credit score is based off of. We have this information here, but I mean, wouldn't dwell on it, too much on it. How to raise your business credit score. Establish trade credit accounts. So we talked about your vendors, right? Ask them, do you have payment terms? And if we pay late, do you report us? That's the information that you'll want to know. Take the example of my clients. They were not aware, and they're like, oh, well, we have a great relationship. Well, guess what? The system was automatically reporting them. Now, on here, it says lenders typically want the 5-3-2 rule. What is the 5-3-2 rule? Again, I don't want you to dwell on this too much because there's always different ways that we can mitigate your business application. But 5-3-2 rule is essentially they want to see 5 accounts on your credit report. Out of the 5 accounts, we want to be able to see 2 paid off loans. So maybe this could be a car, or a car that maybe you sold back, or a credit card, maybe that's paid off, or a loan, personal loan that's paid off. And then we want to be able to see 3 business credit cards. This will set you up for success. Again, don't dwell on it too much if you don't have that, but ideally, that's what lenders would like to see. Encourage your vendors and suppliers to report your positive payment history to the credit bureaus. There's also vendors and lenders out there that will only report you negatively. Okay, so just be careful with that. Pay bills on time or early. If you pay them earlier, it'll hit your credit report faster, and not faster, that's a bad. But if you do it earlier, it actually improves your credit score. The timing of it, especially if you're going to go apply somewhere and you want your credit score to be up there, you want to pay those earlier instead of the actual due date. So let's just say maybe like a week and a half, depending on when your statement cycle is ending. That'll also help you improve your credit score. Don't max out your business credit cards. Honestly, the way that I tell my clients to go ahead and use their business credit card is just use it as delaying your payables. You were going to use your debit card anyway. You transition to using your business credit card, and then just pay it right back once you get your statement. So that way, 1, you're delaying your payables. It gives you some time to make that money back. And then cherry on top is 0% of financing and your reward that you may be able to get as well. If you do have to carry the balance, especially let's just say during the holiday seasons, or you have more expenses and you're waiting for some payments, try not to use more than 30% of your availability so it doesn't bring down your score. Avoid judgments and liens. This has killed deals in the past where even though it's paid off, because it's judgment and liens are usually related to courts and government, they're so hard to take off once they're already there. Also, if let's just say you have payment plans with IRS, they may see that you have, let's just say, a property. So if you don't give them a call, they're automatically going to put a lien on your property. So you can give them a call and say, hey, what's the payment that I can put on a monthly basis so that I don't put a lien on my property, because then that looks bad with the bank. So that judgments and liens could stay up to your credit score, on your credit report up to 7 years. So that's a very long time. Open a business checking account and a business credit card so that you can see an accurate view of your cash flow. So I had a client that had 5 different locations, and for yogurt, I believe it was Yogurtland. I forget which one. It was one of the chains, and he had everything all under one business account. And I said, okay, well, what happens if you need to close one down because, I don't know, you just don't have the capacity anymore, or some life changes happen? How will you know which one's your more profitable one? And he looks at me, and he really didn't give me an answer. He's like, I don't know, I never thought about that. So he's like, what do you recommend? I said, I recommend that you go ahead and open a new account for each location. And guess what? About a year later, he ended up closing 2 locations. He ended up finding out that 2 locations were actually not making him money. They were actually costing him money. But he didn't know that because he was seeing all a lump sum in one business checking account for all his 5 different locations. So just make sure you're always communicating with your banker. We actually can help you out with these different things. And that's one of the things he wouldn't have realized if he wouldn't have, go ahead and did the change. Additional credit score best practices. So building your business credit report. I mentioned to you, you want to set yourself up for success. You might not need a loan or anything like that right now, but let's see in the future. You may have a great opportunity maybe to do some government contracting, or maybe you get this big client and you're just like, wow, like I really need to set myself to have some cushion in my business account, and you may need some sort of access to capital. So very important that you start now. And as soon as you open that business account, that you have some sort of business credit established. Streamline accounting. So establishing separate accounts. I mentioned that to you earlier, the importance, so that way you can get an overview of what each location or each business is doing. Because I know some of you love to open up multiple businesses. We have serial entrepreneurs out there, which is great. I know that our economy loves you for that. But just having that streamlined accounting as well. Better record keeping, so establishing an LLC or an EIN number to keep your business and personal separate. It's a very good idea to keep that separate. And then more relevant account features, so for you to be able to collect faster. That way you can pay your payables faster. So this could be like an invoicing or merchant services. I know that some of them even do same-day funding nowadays. Anything that can help you get paid faster so that you can pay everyone on time. Are some things that can also help you with establishing your business credit. Now let's recap what we learned today. And then it looks like we have plenty of time to go through resources. I always like to give the resources at the end. But in the meantime, let's go ahead and recap what we learned today. So we talked about applying for an IRS EIN number. You can apply through that irs.gov so that you can keep things separate. Also consider forming an entity, an LLC, or a corporation. Always work with your accountant to see which one is going to be the best one for you. And also I have a resource and where you can also get a discount as well. Apply for a small business credit. That's the first thing that you should do once you establish your EIN number with your LLC or corporation. And also just make sure that you are applying to one that is going to report to established business credit. Believe it or not, there's some companies out there that only report you negatively. You want them to be there for the good and the bad, okay? So just make sure that you are working with a lender that's going to report positive, both positive and negative. Ask vendors to report your positive payment history. So I mentioned the examples earlier. That was a huge surprise for some of my clients. So I always like to create that awareness for people. And then keep your business credit use to 30% or less. That will help you keep a healthy credit score. And then also the lenders will see that as a green flag of you being able to use your credit responsibly. And then, of course, I talked about monitor your credit scores and your reports just to make sure that there's no inaccuracies there. And if needed, then you can go ahead and fix them so that they can boost up your credit score. So why would you want to build business credit? You want to qualify for financing, secure your better interest rates and better payment terms, as I mentioned. So your goal should be to be able to get approved by those major banks like ourselves, okay? You can also add to working capital, lease equipment and vehicles. And of course, you can grow or acquire another business by having good, healthy credit. Now, there's 3 QR codes here. The first one is our business empowerment site. It just had a name change, so you can access small business resources. I'm also going to go over some resources right now so that you can have them and be able to set yourself for success with any additional resources. And then the second one is Better Money Habits. I did mention that I sit on the board. We drive volunteerism, but there's also financial literacy that's available for you, the public, so that you can get the financial literacy that you need, whether your kid is in college, you're in military, you're a veteran, you're trying to buy your own home, or if you want to see better money habits for small business, there's some financial literacy there as well. And then, of course, the third one is, let's just say that today was very challenging for you to come. And so you still want to gain the information and the workshops. You can scan the third QR code and we have access to different speakers so that you can go ahead and get the information that you need. Now I'm going to open it up to see if anybody has any questions before we move over to resources.
Okay, there is one. No, this is not.
No questions? Okay,
No.
awesome. So let's go ahead and get into resources. And so I am going to, Irene, you still have this, or do you need me to forward it to you?
Yeah, yeah.
Oh,
I have another question. Yeah, new question.
yeah.
So there are credit cards, line of credit, and loans. Can you describe the differences and let us know if there are others?
Yes. So I actually just did a workshop earlier about business products in general and which product you should use for each need.
Mm-hmm.
But essentially for business credit cards, you're going to use that pretty much for anything that you can use a checkbook or your ATM or your debit card. And you're going to use that for all of your operating expenses. Pretty much anybody that accepts a credit card, you're going to use that. I don't recommend a business credit card for you to be able to go buy a piece of equipment, a commercial property. I know sometimes you have like a large credit line. Do not use that because you're going to end up paying way too much in interest. So that's what business credit cards are for. Operating expenses, office supplies, those operating expenses, you go out to lunch, business expense. That's what a business credit card is for. Line of credit, that would be for any type of service industry that has any type of inventory, or let's just say that they have repayment terms. So your clients, let's just say they pay you every 30 days. And so you need to manage your cash flow, or let's just say you get a vendor or supplier discount. Like usually some suppliers, if you pay them cash, maybe like a 10% discount. So you can use it for your vendor's credit. And then pretty much just think anything short-term financing. You don't want to carry the balance more than 1 year on that. And if you want to keep it revolving, meaning that you use it, pay it back, use it, pay it back, and just keep it revolving. Try not to use more than 30% of it. And then that's what a line of credit is for. Something else that I want to mention about a line of credit is that a credit card, as soon as you swipe your card, you get a grace period of 0% financing. Line of credit, you touch it, boom, it starts ticking, and that you start paying interest as soon as you touch it. Okay, so you see how the difference of why you wouldn't want to put equipment or anything like that on it. Something else about line of credit is that they go based on prime rate. So what does that mean? Prime rate just recently went down. So we were at 8.5. Now we're at 8% in prime rate. So they might tell you your rate's going to be prime rate +2. So guess what? A few weeks ago, it would have been 8.5 +2. Now you're actually in the green and you're getting a half a point discount. So it would be 10%. So and then the payments vary. So it's not a fixed payment, it fluctuates based on your balance. Term loans, those are used fixed assets. Okay. That would be for any type of equipment. You want to purchase a commercial piece of real estate. Just think anything long-term, anything that's a fixed asset. You want to hire employees, so you want to go ahead and get a working capital loan. All of that you would use as a term loan. There's something, another product that I really like. It's called a revolver to term. So it functions like a line of credit in the first 12 months, and then after that, it actually becomes a loan. Why do I like it? I'll tell you right now. So let's just say that you just moved into an office and you have some tentative improvements that you want to do, but you say, you know what, I'm not going to spend more than 100,000, so I'm going to get 100,000, but I don't know, like I don't want to pay 100,000 if I'm not going to use the full 100,000. So we'll give you a line of credit for 100,000. You'll use it as you go for whatever you need. You need to paint, you need to buy furniture, and let's just say that you only use 25,000. Then we're only going to bill you and term out that loan for 25,000. So that's probably the only other one that I would have added. There's also acquisition loans. And acquisition loans, let's just say that you go and acquire another company. So you're acquiring, so we can actually do a loan for that. Or let's just say that your partner is retiring, or he has some changes, or her has some changes in life, and they want to sell their shares, and you need to buy them out. We can do a loan for that too. Hopefully that helps. I feel like I did a whole other workshop.
Yes, it was very informative, as always.
Awesome. Thank you, Irene. All right. I think I saw somebody with their hand raised, but maybe they raised it down. No more? We're good?
Yeah, no, we're good.
Okay, awesome. Well, let's go into Business Owner Resource Toolkit. As I mentioned, my job is to provide the resources that we have and also that our nonprofit partners have. We here at Bank of America, we actually support over 40,000 nonprofits throughout the country. And we do that because we have certain things that we want to help the community, certain things that we care about. We have a passion. And so one of the passions that we have and one of our pillars is helping our entrepreneurs and business owners grow. So PACE is actually one of our nonprofit partners. They have resources to help you, and we partner up together to work together with the community to be able to get you the resources that you need. Now, I'm not going to go through all the slides because that'll take me about 30 minutes, but here are some small business resiliency and empowerment organizations. I will forward this over to Irene so that she has it and she can forward to whoever needs it. I'll also give you my contact information if you need anything. But the nice thing about these is that these programs Bank of America pays for, there's a lot more of them, but right now we're just highlighting these. And if you're interested in any of these programs, let me know and I can connect you to one of our coaches that can help you with the programs that they have. We also have the Tory Burch Foundation. Bank of America is a proud sponsor, one of the major sponsors for Tory Burch Foundation. So we donate to Tory Burch Foundation so that they can provide resources and help you scale your business. They also have webinars as well. As you can see here, they also have webinars hosted on Wednesdays at 1 p.m. Eastern Standard Time. So if you're interested in this program, click here. That's the nice thing about this deck, that you can click and it'll just take you for most of the websites to get more information. This is the Academy, and this is actually really, really cool that we did this. So Bank of America employees get training from this site. So we use it here personally. I have taken some of these trainings. So on here, you'll find career readiness, financial wellness, skill-specific learning, and family enrichment. And we have opened this so that you can use it for you, your family, and your employees. That's huge. We are a 500 Fortune company. We're one of the largest we were one of the largest in the worldwide, one of the largest companies. So just imagine how much money Bank of America invested in this program, and now we're opening it up so that everybody can have the same type of training that Bank of America employees get here internally. I do want to just share something that my boss does for skill-specific learning. I do a lot of public speaking, a lot of networking. So he'll send us videos like, hey, watch this video. You'll learn a little bit about being a little bit better speaker or how to be more impactful or influential. All those things you have access to now. So you want more information, click here. It'll take you right to it. Bank of America Business Event Center. So we, as I mentioned, if today it didn't work in your time zone, or you want an earlier time, a later time, scan this QR code. You'll have access to other cash flow management, social media, how to use your social media platforms, how to start a business, different topics on here. We all take turns each week to make sure that we got all the topics on there so that they're available for you. Breakthrough labs. So if you are in the tech industry or any of these tech industry examples, so fintech, cybersecurity, payments, big data, wealth tech, health tech, ed tech, you get all the techs, then you can actually apply to be part of this program. They focus on marketing, operation, and financial wellness. And sometimes at the end, they may give you access to capital as well. So very great program. It's an accelerator program. So if you're interested, you can click there. It'll take you right to it. And we are in Los Angeles. So I wanted to share that currently we have in 5 underrepresented areas, Atlanta, Charlotte, Chicago, Dallas, and Los Angeles. We are giving up to $25,000 in case you want to move in your business into a piece of commercial property. Now, it is for women, and you must be considered minority, even though we're not minority anymore. But yes, so up to $25,000, it's a help for you to get in and helps you with the down payment. So it's a nice help. We're trying to expand this to other areas as well, but right now we have it in these 5 cities, Los Angeles being one of them. Our healthcare professionals, they're out there making sure that our teeth are healthy, our pets are healthy, that we're healthy. So we give them discount as long as we're veterans that are always fighting for our freedom. So up to 25% for the discount program. If you wanted more information, just click on it. It'll take you right to it. I mentioned earlier that we do a business owner report because we want to see what our clients need. And one of the things that they told us is, you know what? We applied and you guys did not give us a loan and we didn't know where to go, or we need $2 million because I have this $2 million idea and you guys are not funding, but you guys are not telling us where to go. Well, we created the Access to Capital directory for entrepreneurs. This is available for the public, and there's different types of funding here in this directory. Of course, I always mention go to your bank first and see if they can do it, because you're going to get the best deal there. Or, you have PACE here. Irene can actually help you. Also, there is CDFI, which are Community Development Financial Institutions. They're a nonprofit where they create loans for those that are not be able to approve in a bank. I always tell everyone, okay, if you have an idea, let's talk about it, how we can get you funding. Maybe the bank is telling you the max they can give you is $50,000, but let's just say you have another Uber idea, for example. I think their initial investment was like $1.5 million. And or I forget what it was, so don't quote me on that. But they also, something else that I learned, that a lot of the public companies, so the ones that are out on the public market to buy stocks and all of that, 50% of them were funded by venture capital, so investors. So definitely take a look at that. If you have an idea, it might not be a bad idea. That's how you kind of can get the funding that you need. And if you're not familiar as to what an angel investor crowdfunding is, you can go to the directory and it'll tell you information on how each one works. There's also grants, right? So you can go to grants.gov, or you can go to the Access to Capital directory, and then there's some grants on there that we vouch for. This year, we went a little bit step further, and we created the Access to Capital connector. So that one you can also to the public, www.accesstocapitalconnector.com. Fill out a short application. After you fill out your application, we will connect you to a coach and a nonprofit partner of ours that can help you get access to capital. And that's pretty much all I have. Actually, no, let me go over these programs here. Cornell University, this is huge. We actually partner up with Cornell University. They're an Ivy League university, so they're one of the top universities, very prestigious. And we are paying for this program where you can gain the skills, knowledge, and resources for you to be able to build a successful business. And then there's also Kaiva Women Entrepreneurship Fund. So if you're not familiar with crowdfunding, just think of a GoFundMe, except you have to pay it back, but you pay it back at 0% no interest. So a crowd gets together, one maybe donates $25 to you, the other one donates, I shouldn't say donating, they're lending $100. Somebody can lend you 50,000 and you just have to pay them back. So that's another way that you can get access to capital, affordable. That's another resource. And then for our retail companies that are women owned, we want to support them, make sure that they thrive. And so there's the Seneca Women Marketplace, and where you can log in, where we would advertise your retail business. Right now, we're only doing retail businesses. I don't know if it's going to eventually change to service businesses, but right now it's available for retail businesses. And then this is actually the last part. So we have a partnership with InkFile. So if you're sole proprietorship and your accountant is recommending for you to incorporate or get an LLC or a corporation, we have a nice little discount, anywhere from $70 to $150 discount. And then we also have for your branding, any type of banners, tablecloths. Let's just say that you want to have an exhibition booth, or you want business cards, flyers. We have a partnership also with Vistaprint that'll give you up to 30% off. So definitely take advantage of this. I'm going to go ahead and send this to Irene and open it up to any questions before I let everybody go.
Yeah, we're gonna have a slide for you, maybe tomorrow or next day. And then the webinar is being recorded, so you can find our website e-library maybe next week. Okay?